Stop believing the Wolf of Wall Street lies. You probably think white-collar crime looks like Leonardo DiCaprio throwing fun coupons off a yacht, or frantic hackers typing code in a dark room while techno music blasts in the background. You imagine a world of high-stakes glamour, private jets, and geniuses outsmarting the system until a dramatic FBI raid brings it all crashing down. But here is the boring, uncomfortable truth. Real white-collar crime usually looks like a guy named Gary sweating through his shirt while staring at an Excel spreadsheet in a windowless office. You've been sold a fantasy that frames financial fraud as a victimless game played by charming sociopaths. But what movies get wrong about these crimes isn't just about the lack of explosions or car chases. It's about the psychology, the methodology, and the devastating reality of the fallout. To understand the real face of corporate crime, we have to strip away the Hollywood gloss and look at the banality of evil. Let's start with the criminal mastermind. In films like Ocean's 11 or The Big Short, the perpetrators are almost always brilliant. They are the smartest guys in the room, playing 4D chess while everyone else is playing checkers. They have a grand master plan that involves complex algorithms or shell companies in the Cayman Islands. You watch them and think, I could never do that because I'm not a math genius. But in reality, the average white-collar criminal isn't a genius. They are usually just a middle manager with a mortgage they can't afford and a gambling problem they can't hide. Criminologists use something called the fraud triangle to explain why people break the law. It requires three things: pressure, opportunity, and rationalization. Movies are great at showing the opportunity, the open vault, the unguarded server, but they almost always fail to show the rationalization. Real fraudsters don't usually start out trying to steal millions. They start by borrowing $5,000 to cover a debt, telling themselves they will pay it back next month. It's not a master plan, it's a panic move. Then next month comes and they can't pay it back, so they take a little more to cover the tracks. It's a slippery slope, not a base jump. The mastermind you see on screen is actually just a desperate person digging a hole, terrified that someone is going to notice the dirt on their shovel. Then there is the actual mechanism of the crime. Hollywood loves the hack. You know the scene. A guy in a hoodie types furiously for 10 seconds, says, "I'm in," and suddenly millions of dollars transfer across the globe. It's visually exciting, it's fast, and it is almost entirely nonsense. In the real world, financial crime is excruciatingly boring. It's not about bypassing firewalls with custom code, it's about abusing authorized access. It's a payroll administrator creating a ghost employee. It's a CEO backdating stock options by changing a date on a PDF. It involves thousands of hours of mundane paperwork. If a movie showed you how real embezzlement happens, you would be watching a montage of someone reconciling bank statements and forging signatures on invoices for 2 hours. The weapon isn't a supercomputer. It's usually just bad accounting software and a lack of oversight. But the biggest misconception involves the victims. In the movies, who gets hurt? Usually it's a faceless insurance company, a corrupt bank, or a villain who deserves it. We root for the con artist because the victim is abstract. We think, the bank is insured, nobody really loses. Real white-collar crime devastates real people. When a company like Enron or WorldCom collapses, it's not just the stock price that dips. Thousands of employees lose their jobs. Pension funds vanish, wiping out the retirement savings of teachers and firefighters who never even heard of the company. Small vendors don't get paid and go bankrupt. The ripple effect destroys communities. In the movies, the crime ends when the credits roll. In reality, The poverty and suicide rates associated with major financial collapses linger for decades. And just when you think you know how the story ends, everything changes. You're probably picturing the dramatic arrest scene, right? The sirens, the SWAT team kicking down the door of the mansion, the perp walk in handcuffs with news helicopters circling overhead. That almost never happens. The investigation phase of white-collar crime is a war of attrition, not a battle of bullets. If you are a target, you don't wake up to a gun in your face. You wake up to a subpoena delivered by a process server. Or worse, you just get a call from your company's general counsel telling you to come to a conference room. The FBI doesn't usually need to raid the building because they can just demand the documents legally. The chase is actually a team of forensic accountants sitting in a basement for 3 years, reading 2 million emails. The drama comes from the silence. It's the waiting. It's the suspect knowing the hammer is going to drop, but not knowing when. The psychological toll of a 3-year investigation is grueling, but it makes for terrible cinema, which is why Hollywood replaces the forensic accountant with a detective holding a badge and a gun. Now, let's talk about the punishment. This is where the myth of club fed comes in. You've heard the jokes. Rich guys go to prisons that are basically country clubs with tennis courts and lobster dinners. They serve 6 months, learn to paint, and come out to write a best-selling book. While it is true that minimum security camps are vastly different from maximum security penitentiaries, the idea that they are vacation spots is a dangerous exaggeration. You lose your freedom. You are strip-searched. You are separated from your family. But the physical prison isn't even the worst part of the punishment for white-collar criminals. The real sentence is what sociologists call the collateral consequences. In the movies, the con man gets out and pulls one last job. In reality, a conviction is a professional death sentence. If you are a lawyer, doctor, or accountant, you lose your license. You are barred from holding office or sitting on a board. Your reputation, which was your currency, is hyperinflated to 0. The divorce rate for white-collar convicts is astronomical. Their social circles evaporate. The country club friends who laughed at their jokes don't return their calls. The glamour of the crime is replaced by the stark reality of working a minimum wage job because no one will hire a convicted embezzler to handle money. The tragic arc isn't a blaze of glory. It's a slow fade into irrelevance and poverty. There is one final lie that movies tell us, and it's the most dangerous one of all. They tell us that white-collar crime is rare. They treat it like a lightning strike, a singular, shocking event. The truth is, white-collar crime is everywhere. It is estimated to cost the global economy trillions of dollars a year, far more than all street crime combined. It's in the mechanic who overcharges you for parts you didn't need. It's in the doctor billing insurance for tests they didn't run. It's in the wage theft of employers not paying overtime. By framing it as a movie villain problem, we ignore the fact that it is a systemic rot. We love the movies because they give us closure. The bad guy gets caught, or the charming rogue gets away, and the music swells. But the reality is messy. Sometimes the bad guys don't get caught. Sometimes they pay a fine that is less than the profit they made from the crime, which just makes the fine a business expense. Hollywood wants you to look at the individual, the wolf, the con artist, the hacker. They want a character study. But if you really want to understand white-collar crime, you shouldn't be looking at the people. You should be looking at the systems that allow them to flourish. You should be looking at the incentives that make fraud more profitable than honesty. So, the next time you watch a movie about a high-stakes financial heist, enjoy the popcorn. Enjoy the drama. But remember that the real version of that story involves a lot less adrenaline and a lot more ruined lives. I'm curious to hear your take on this. When you think of movie portrayals of financial crime, do you find yourself rooting for the criminal, like in Catch Me If You Can, or do you see them as the villain? And which movie do you think actually got it closest to reality? Let me know in the comments below.